We've got Mike Jones, who's the Managing Director of Impact Minerals.
That wouldn't be the first time we've used the impact joke in the 16 years since we've been listed. So thanks for coming along today, ladies and gentlemen. And I'm going to talk to you today about a mineral that is not very well known, but is actually a crucial part of the energy transition, which we're going through and will go through over the next decade or so. And that is a mineral called high purity alumina. And we believe that we have a world-class resource of this material here in Western Australia, and it lies underneath Lake Hope. And we like to call this the magic lake, not so much as what it looks for at certain times of the day and certain times of the year, but in the top 2 metres of this lake here, there is something in the order of 15 to 20 billion US dollars worth of high purity alumina. And it's a relatively straightforward job to dig it up, process it and turn it into this high demand, high margin material, and that is our aim over the next couple of years. We're in a joint venture. The deposit was found by Roland Gotthard. He's here today, and you should definitely come to our booth and talk to him about the exciting way that we discovered the project, which was on LinkedIn, based on his photographs of doing bench scale experiments with his wife's slow cooker. And that's how we produced the HPA, and his wife was certainly glad when we got into the joint venture that she could get back to cooking the casseroles. So, what is it that makes this project world-class? It's actually about the economics. This is the project finances that we put out in November. Scoping study level, so it's plus or minus 30% at the time. And there's a couple of key numbers here that you need to look at. First of all is the benchmark production rate is 10,000 tonnes per annum. Don't really need to dwell on that, but that's where our peers are trying to get to. The big number here is the net present value. It's 1.3 billion Australian dollars or 1 billion US dollars. And the second one is actually the operating cost. And we believe that we can produce HPA for less than $4,000 a tonne. So the thing about battery metals and also strategic metals, rare earths, lithium, you name it, graphite, is that they're all bulk commodities. And if you're going to get into the bulk commodity space, and we were taught as young children never to probably get into the bulk commodity space because one of 4 things has to be true in order for you to get through the mining cycle. And the first one is you've got to have one of the largest deposits out there. Secondly, preferably, it's also got to be one of, if not the highest grade. Thirdly, you've got to be first to market or have very established client relationships. And an example of that is Pilbara Minerals Limited, who sailed through basically this recent lithium downturn because they already had those relationships and contracts in place with the established battery makers, etc. Or lastly, you have to be one of, if not the lowest cost producer. And so we believe that this project will be the lowest cost producer of HPA globally by a significant margin. And so where's the value proposition and impact right now? So we put out the scoping study back in November, had a bit of a kick in through there, but our share price was 1 cent at the time. We're actually up sort of 50 to 70%. We're almost at a record market cap high at the moment of about 45 to $50 million. So whilst a lot of the industry has been suffering in terms of a downturn in the junior sector, those with market cap sort of less than 50, we've actually thrived in that area. And when I first got into this project, I knew it was going to be a slow burn. It was going to be a story that we needed to educate people about and keep telling. And believe me, I've been telling it rather consistently for 18 months across all forms of media. And I think we're finally getting some traction. And so it's a good time to get on. So we believe that we can drive the value of this company up to the value of that net present value. That's what it means. If someone wants to come along today and write me a cheque out for 1.3 billion Australian dollars, I would take it and hand over the deposit, and they would still be able to go out and make some money on it in the future. So that's about 30 times from where we are right now. And so we believe that we can get there, and I'll show you a company that's already done it later on, over the next 2 to 5 years. And that's why you should join us on the journey as we move Lake Hope towards production. So the big driver is this low cost. So this is a theoretical cost curve analysis. These are actual producers. The Chinese and the Japanese produce their HPA out of the refining of predominantly aluminium metal. So that metal has been mined through bauxite, out of bauxite. It's gone through a very dirty, environmentally unfriendly process. The Bayer process spits out a lot of red mud. It's very energy intensive. And that's their feedstock that they then further refine to produce their HPA. And that gives very strong, very high operating costs of sort of 15 to 20,000 US dollars a tonne. There are some other players in the space, the standout of which is Alpha HPA, A4N, you should definitely look at their stock. they're probably going to be down in the $6,000 to $7,000 US dollars, maybe $8,000 US dollars a tonne. We're waiting on some new figures for them coming out. We believe from our scoping study, we're going to be 30 or 50% lower from that. And that's what I first saw when I saw this project. That was the potential for us to be a dominant supplier in this market. So what is high purity alumina? I hear you all saying it's aluminium oxide. In its native form, it's sapphire, for those who like jewellery, or ruby, and also corundum. It's exceptionally hard, it's thermally inert. And the benchmark purity that we're trying to get to is 4 nines. I think Philippa had 6 nines. We're not quite there yet, but 4 nines is the benchmark. And 4N is called 99.9% pure. It's on the critical minerals list for Australia, Europe and the USA, and it opens up avenues for us for funding as we move forward towards pilot plant and demonstration plant construction. So what's it used for? We're at the Battery Minerals Conference. It is used as a separator between the anode and the cathode in lithium-ion batteries. So those of you who have a Samsung phone right now are probably quite grateful that they're not exploding in your pocket like they were a few years ago. And I'm sure it's every Tesla driver's nightmare that they don't want their batteries to catch on fire as they're driving to work. And that's because it stops thermal runaway in lithium-ion batteries and other battery architectures. It's thermally inert, and so provided the seals are correct, then it'll prevent the heat build-up in the battery as the chemical reaction occurs and the lithium passes from one anode to the cathode. So the second major use, and probably the greater demand, is actually in LED light globes. So most of the light globes in here now have got LEDs, have got HPA in there. And also for those of you watching your ULEDs and your OLEDs made by Samsung and LG, they also have HPA in them. And we're seeing increasingly large numbers of buildings around the world that's being completely covered in LEDs. And there's a huge forecast demand in that space as well. There's lots of minor uses, so sapphire glass, all of you got Apple Watches, iPads, etc., all got sapphire glass in them. That's a small but very profitable business to get into. But in the first instance, we're going to be providing bulk HPA at lower cost than many others. And that's reflected in this supply and demand curve put together by CIU, who I think might be in the next session. This is actually data 4 or 5 years ago. Was actually proved to be accurate. It's growing at about 20-25% per annum, and we're going to see by the end of the decade significant growth for LEDs and lithium-ion batteries, and a possible emerging supply deficit somewhere around about 26, where we hope to be sort of getting into relatively small-scale production. So what's it currently worth? So the benchmark, as we've discussed, 4N in through here, is actually trading at between 15 to 25,000. It's forecast to go to 30,000 US dollars a tonne by that 26, 27, when that supply deficit is coming through. And there's also some good money to be made in 3N, and this is where the bulk is. But the cream on the top is made in 5N, and that's certainly been Alpha HPA's entry into the marketplace. And they've been getting some great market traction on the back of these 5N products that they're producing there. And that will be something that we'll be looking at as we move forward. So how much of the, gone one too many. How much alumina do we have? Well, in that lake, we've actually got nearly 1 million tonnes of alumina. Multiplied by 20,000 US dollars a tonne gives you your in-ground value of 20 billion US dollars. And that's more than enough at 10,000 tonnes per annum for a 50-year mine life. As I said, it's a bulk commodity. There's no shortage of it. It's a matter of how much you can dig it up and produce it for. And this is the location. We're about 500 kilometres east of Perth. We're very close to the Forrestania Nickel Mining Centre and near the Wave Rock at Hyden. We were there last week on a visit, and there's a fantastic article in Stockhead today, if you're a subscriber, about that visit. And this is the two lakes where the resource sits. It's in a lake system called Lake Hope, and the resource dominates in West and East Lake. And one of the first natural advantages we see is that there's actually a fire break that goes right up to the edge of the lake, and this is basically half the haul road has already been put in for us, and it's about 25 kilometres to the nearest significant road. So this is Roland. You might not recognise him. He's actually dressed smartly today, and here he is using our drill rig, which is a rubber mallet and a plastic push tube in through here, and this is how we drilled out 20 billion US dollars worth of material for the total cost of 60,000 Australian dollars, including assays. So that is actually the best return on a drill program you'll ever had. We did actually break the hammer last week doing some infill drilling, but the ASX wouldn't let us put out an announcement that the drill rig had broken down whilst we got a replacement from the Hyden warehouse store. But this is how we did it. And it comes out looking like this. It looks like plasticine. And incredibly, it's naturally mostly less than a micron and few tens of nanometers in size. It's an evaporite. And that lends itself to some amazing beneficiation advantages, which we'll talk about as we dig this material up. How are we going to dig it up? Well, this is the East Lake, and there's a high-grade core off the edge of the East Lake, and we're just going to drive it off the side with a digger. We're going to stockpile 3 years' worth of supply on through here, and we're going to process it off-site. So as a result, there's going to be no drilling, blasting, crushing, grinding. It's just going to be trucked and hauled off-site, and that leaves us with a hole in the ground that's only about 1 to 2 metres deep, and so there is virtually nil long-term environmental rehabilitation liability on this project. It's really a quarrying operation, but we will have to go through the whole mining approvals process to get to the mining lease. So trucking and mining, less than 5% of OPEX. That's the first commercial advantage. One of the big ticks we've already got is that we've done the heritage survey with the local Naju group, and they have a long history with mining, and they have cleared the land, cleared the surface of the lake for mining. So there are no impediments from a heritage perspective to going ahead with the mining lease application. We will have to come to a mining agreement with them, and I'll be spending a bit of time in Norseman over the next 12 months, meeting all the families there and working out how we can help their groups in that area. And I'm certainly looking forward to that, not having had much experience in that area. So once we've dug it up, as it turns out, the fact that this material is so super fine grained, and for those of you who've got memory of physics, very fine grain sizes basically lead to infinite surface areas. So nano-sized particles, infinite surface area, you can drop this stuff into the leach and it just goes basically almost instantaneously into solution. So it processes and goes into solution incredibly easily, and so we have only 4 stages to 5 stages of processing to get the material out. It's not complex, it's pretty straightforward, and look for the video when we start making the material on the slow cooker, which is coming up. We've got great recoveries, saleable fertiliser waste products, and we're optimising all of that work now as part of the pre-feasibility study, which is well underway and should be completed by the end of the year. So there are 4 pillars to that pre-feasibility study. First is the metallurgical test work. We have announced that there are 2 processes by which we can produce HPA. We were running with the first one, which Roland invented and has a patent for, and we've worked on the second one. Again, Roland's fantastic ideas, close to getting that under IP protection, and both of those are moving forward in the pre-feas. So one of the big outcomes will be which one of those 2 will we use. The second pillar is actually getting the mining approvals process underway. So we've just received our final environmental reports. No significant issues there. We'll announce that shortly. And that was really the last thing remaining for us to lodge our mining lease application. Given the advice we've had already and the results of the heritage survey and environmental survey, we're hoping that we'll be able to rapidly get a mining lease granted here and be up into production in a relatively short period of time. The big other thing that we'll be looking at is where the process plant will be located, and a lot of that will be driven by what sort of grants we may be able to get to build the demonstration plant and the larger plant as we move forward, given that HPA is on the critical minerals list. And then finally, and this is the other thing about bulk commodities, it's also about finding your offtake partners. You need people who want your product. You've got to be able to produce it at the right specification, at the right time, at a consistent quality over that period. And that are skills that we're building out as we speak now. We've had a lot of interest from people who have skills in that end market, who are interested in perhaps taking a lot of precursor material from us once we get towards production. So Alpha HPA, I talked about them before. 4 years ago, they were a simple junior explorer like Impact, came across a new method to produce HPA. They eventually worked out that they could use a chemical feedstock rather than natural feedstock to produce their HPA. It's via a quite expensive process, ion exchange solvent extraction, so their OPEX costs are still relatively high, but still very significantly lower than the Chinese and the Japanese, as we discussed. And their market cap recently hit $1 billion, and they're just about to announce the construction of their major plant to get to 10,000 tonnes per annum. So they're valued at this with a maximum annual production at the moment only in the few hundreds of tonnes. So this is one of the reasons that we believe we can follow in their footsteps. They've shown what can happen if you get it right in this business, and we're going to be right on their tail. So Impact, we listed in 2006. We currently, our market cap, as I mentioned, 45 to 50 million, and we've got very strong support from 2 German groups. There's a family office in Dusseldorf. They've been on our register for 10 years or more, and ABC is a subsidiary of Deutsche Balaton, which is a well-known investor across the Australian and Canadian resources space. Roland's on board as the project manager, and we're utilising his IP to the best of our ability. So forward plan, complete the optimisation this year and the PFS, and that will qualify us for 80% of the project, get qualifications into potential offtake partners, and then start building a relatively small pilot plant. We'll roll straight through to the DFS, try and get the mining lease granted, and then look towards building a demonstration plant in 2026, 1,000 to 2,000 tonnes a year, which is about the time the supply deficit is supposed to kick in. So hopefully our timing will be right on pricing, etc. And to add to that, we started drilling today on our rare earth project here in the Wheat Belt. So you definitely need to get on board. So come with us on the journey. We aim to be one of, if not the lowest cost producers of HPA globally. It's a unique deposit here in Western Australia, low cost, disruptive metallurgical process, and we're building out our capabilities in metallurgy and final product specs. And so hopefully our time will be right, and we're going to hit it in 2026. So thanks for your time.